Okay, let's begin. Good morning, Checkmate crew. It is 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern Time on this Tuesday, November 15th, 2022. Yours truly, Mickey Blindside here with your market memo. Okay, so let's start with a recap of last week. Okay, so last week we had those softer than expected CPI numbers. Because of that, we're seeing a continuation of this rally here in the S&P 500. The S&P 500 is up. We had a huge day up on that report, and then we kept going up, and today we're gapping up today as well too. We had the PPI report come out, also softer than expected. Guys, remember in June, I showed you guys in June. Look at the last week of June and the first week of July on those high noon highlights. I told you, end of the year, we're going to see softer prints. The data was screaming that at us. TIP, TLT, commodity prices, Fed funds. We were looking at so many different indicators telling us this, guys. Okay, so for all of us here at the Checkmate crew, it should not have been a surprise for us. Now, if you thought this was softer than expected, wait till January. That January number is going to be it's going to be way lower than what people expect. I think so. The January or February one, okay? That number is going to be much lower than expected. All right? So watch. All right? Especially and two, if you looked at the CPI report, a lot of that decline came from auto and used autos. So if you guys are shopping for a used car right now, wait till January, February. You're gonna see some major deals around that time. Okay, and so I think the CPI data is gonna come out way softer than way lower than expected in January, and that's probably when I think the Fed will, they'll start getting a lot more dovish in their messaging. Call it whatever you want. People don't like that word pivot. Okay, when I say pivot, it doesn't necessarily mean they're going to cut interest rates, but what they could do is something like yield curve control. They might even buy some foreign bonds, maybe buy some MBS, mortgage-backed securities. Or they may slow down the rate at which they raise rates, okay? Or they might even stop raising rates and just maintain it, okay? And that would all be quote unquote pivot, okay? Instead of what right now is the trajectory, which is accelerated rate hikes. All right, I don't think the Fed is gonna continue that past January, February. They're just not gonna do that. And already, again, Fed funds futures probabilities, TIP, TLT. We were looking at so many different things. We saw this back in June, July, and not only that, back in the end of September when I had the special session. I told you guys, what my thoughts were and what some of the people that I talked to in the industry were thinking as well too. So none of this should have been a surprise. But again, as always, retail traders were very, very short via long puts, and so that's why we're seeing those getting decimated. The VIX dropping, and then the market is going up. Okay, a lot of retail lost a lot of money because they were in puts. A lot of people were short also semiconductors as well too, SMH. Today the semi shorts are getting squeezed because news came out that Warren Buffett has a 5% stake now in Taiwan Semiconductor. Okay, so Taiwan Semiconductor is gapping up. So, again, record shorts, these people are going to get squeezed. I think that the semis are going to have some strength probably for the next couple of weeks because of this. Because, again, there's so many short positions on semis right now. I think they're just going to get squeezed out on, they're going to get squeezed out before this turns back down. So all those shorts are not going to be able to participate in the next downward move, if a downward move even happens going forward. So that's usually what happens in a bear market. Bears get decimated because they just over leverage. They think it's going to be a straight line down. It rarely is. Low liquidity markets are rarely straight line downs. It just doesn't work out that way. All right. So that's that. What else? Oh, speaking of TSM, I mean, we might as well talk about this. I mean, Australian dollar, guys, what did I always say about the Australian dollar? It is a forward-looking indicator for China. China came out in the news over the weekend. They are injecting liquidity into their markets. It's something like $140 billion of credit facility that's being opened up to property developers. And so over the weekend, we saw a gap up in their markets. They gapped up in the morning. Hang Seng did very, very well. The Hang Seng has been doing extremely well for the last couple of months. And after that news came out, they had some awesome days as well too on Monday and overnight last night as well too. So we're seeing FXI gap up in today's trade, which is the ETF that tracks one of the Chinese indices here in dollar terms here in the US. So we're seeing some strength in China. Again, the Australian dollar kind of showed that. Again, the Australian dollar looks like it is a good forward indicator of China. This level right here was our make or break level back in September. It broke down from there, and that's when we saw a lot of volatility and downward pressure in Chinese stocks. We're at those levels again. Funny, we poked above it, and now we're back under it, and now we're forming this large wick right here. Is this going to be the top and then come back down? I mean, we shall see. That's why this is a dotted line, because it's not that strong of a level. Usually my stronger levels are all in our solid lines. These dotted lines are usually very short-term lines, but it appears as if this is a thing. So we'll see. Okay, I think if the Australian dollar does turn down and let's say on the weekly chart, let's say it closes like this during the week, and then next week it gaps down, that probably means then it was a short covering rally in Chinese stocks. That's what it would imply. Maybe this good news just squeezes out some of the shorts that are in Chinese stocks. So we'll see. Again, I think the Australian dollar will tell where this closes this week, how it closes, and then how it opens next week. I think it's going to show us where China is going to go for the rest of the year. All right. I mean, there's a lot of liquidity coming from China, so I wouldn't be surprised if this ends up closing above this level at the end of this week. I think the Australian dollar might see more, maybe some pressure if we get a little bit higher, maybe into like close to like 0.69 to 68 zone. That's probably where it's going to see some pressure, and that's probably where if you guys are long metal stocks, you might want to sell some covered calls there when the Australian dollar gets to here, because Australian dollar also gives you the demand for metals as well too, as Australia exports a lot of metals. So keep that in mind. Okay, guys. So that's that. That's news that came over over the weekend. Let's talk about crypto again. Let's go back to crypto real quick. Crypto options, the notional value of the ETH options market is just really low, guys. It's just really, really low. So I don't think options is going to mean much for the ETH market. So I'll keep monitoring this, and if this goes up back to like $6.5-7 billion, then we'll start looking at this again. But right now, I don't think I think a lot of people got wiped out with that big move. A lot of calls. Remember, we saw that call selling, shorter dated call selling, and then some longer dated call buying back in December for December, March expirations. Those probably got wiped out. Those values are probably like gone. That's probably where the notional value is going down, is because those calls that were out the money that had some value when ETH was at 1600. Now there's probably not much value at all. And so, I mean, we'll see. Again, I think if this gets to more like $6.5-7 billion, that's when we'll take a look at the options chain again, and that's where we'll find our edge in Ethereum prices. But until then, we'll wait and we will be patient. I am no longer in my ETH position. I got stopped out at break even. Luckily, we were able to take profits at 1650 and use that to pay for our stop. So Right now, it is just going back and forth between our levels. Our levels turned out to be extremely good. I mean, it did overshoot, but I mean, with something like crypto right now, especially in this macro environment with low liquidity, you have to expect there to be some noise around those levels. So, it can overshoot by a couple of days. Unfortunately, it overshot just enough to trigger our stop, literally like 50 cents. It went 50 cents over our stop level. So, I mean, it is what it is. Sometimes that happens. All right. And the important thing is that we protect capital at all times. I'm still waiting for ETH gold ratio. If ETH gold ratio gets down to our uptrend line that started from back in 2020, that is where I will have a meaningfully long position in Ethereum. Okay, and that's going to be around 0.55, 0.56 with today's gold prices. That comes out to be somewhere between $950 to $1,000 per Ethereum coin. So we shall see if we get that. If we do, I will definitely buy with size at that level. Okay, so I'm just patiently waiting. I have my alert set, and we'll let the market determine whether or not we enter that position or not. I'll let price come to me. Okay, patience pays. Okay, guys, so that's crypto. Okay, so end of that. All right, that's all I had for crypto today. Really, what I wanted to focus on. Actually, before I go into that, let's just look at our liquidity signals one more time. After we look at our liquidity signals, we'll take a look at some of the investment themes for end of this year and 2023. I wanted to bring you guys some of the more medium-term plays that I'm looking at right now. But first, let's look at SPX. SPX, again, my plans haven't changed. Some of you guys have been asking me, when is a good time to buy puts? Guys, for those of you who have been buying puts for the last couple of days, you guys are seeing it bleed out. Again, patience pays. Now we have I started an FEZ position, and again, this is a very initial small put position for February and mine are put vertical debit spread. So my put position is already hedged by definition because I'm using a spread. All right. So I just got into a small initial position on this, but for those of you getting into puts with size for the past few days, I mean, you guys probably saw a good amount of losses then. Okay. So again, patience pays. My main put buying again hasn't changed. 41.25. Okay, 41.25, and I told you guys why that 41.25 zone is important. 3,900 to 4,000 is delta neutral. Once we get out of delta neutral, that's when we start seeing the options market getting a little bit bearish on price. All right. Also, too, this is where this year we have seen hedging demand come to the market every time we see that 41.25 zone. All right, happened in June, happened in August, September. It happened again. It happened in all those times. All these times we've had hedging demand come back into the market at that level with some type of large trades to the sell side. All right, so I'm just saying that is probably where it's a good reward to risk setup to buy some puts. Okay. And again, if we're wrong, gamma, won't be too bad because at least for me, I'm going to be buying for 3 or 4 months out. If we're wrong, let's say in about a week or so, it still keeps going up and it breaks through our levels, then, I can exit with a very small loss. Whereas if it hits there and then comes down, well, I have a potential to make, 3-to-1 on those spreads. So again, I'm going to be doing 3-to-1 reward to risk. So if it's a $10 wide strike on SPY, for example, like let's say I do 410 and 400 put vertical spreads, that's a $10 wide spread. I'm going to want to get that in at 2.5 or less. If I get in at 2.5, my profit's going to be 7.5 potential. So that gives me that 3-to-1 reward to risk ratio. So again, putting the math on our side to make sure that our losses are small, but we get paid for the risk that we take. So again, 41.25 is where the reward to risk becomes stacked in your favor for a put vertical debit. So that's still where I'm looking for to short the market, 41.25. I might even use just SPY. I was saying like, I might use QQQ. I don't know. I'll let you guys know when we get closer to there. You know, I might just keep it simple and just use SPY, or I might use QQQ. If our IVW IVE chart, which is our growth to value chart, if it still keeps pointing down, I'll definitely consider QQQ. But you know, it made a monster move in the past few days, and if it keeps going up like this, then I'm not going to feel comfortable doing QQQ puts even at those levels. I might just stick to SPY. So it really just depends on this indicator right here, IVW over IVE. That's the growth ETF divided by value ETF. If this is going up, it means the NASDAQ and growth tech stocks are outperforming. If it's going down, it means the Dow Jones stocks and value stocks are outperforming, okay? That's one of our indicators for which sector or which index to use for our trade. Speaking of indicators, I want to talk about our junk bonds ADL, our junk bonds advanced decline line. Now, this is something that we track here at Checkmate Trading. Most of you guys are probably not going to see this anywhere else. I know the pros track this. When I was in the industry, we used to track this, and there's fancy software that tracks this for them. But at the retail level, you're not going to find a lot of people that do this. Okay, but we do it here, and we give it to you all live for free in our Discord every night. I update this. You might as well join the Discord. The links are in the description below. Come join us. There's no paywalls. We do it for the education. We do it for the people. All right. So anyway, our junk bonds ADL line is still, it's stable, and it's actually increasing. It's our lie detector. Okay. So junk bonds is the riskiest portion, the most risk on portion of the market, of the bond market. Whenever we see advances over declines, meaning whatever issues get traded, whatever bonds get traded, the corporate bonds get traded in the market, all right, if there's more issues that advance than decline, then it's a positive number, all right? If there are more declining issues than advances, then this line is going to turn down, okay? So we've been seeing more issues are positive than declining. And so that usually means that rallies are sustainable and that supports usually hold. Okay, so this is a good lie detector. All right, if this is turning up, it means the rally can at least last. So this bear market rally could last a couple of weeks. All right, based on what this is telling us right now. So again, that's why I keep preaching to you guys patience. In this market, you really got to be patient. All right, again, I keep telling you guys this, in low liquidity markets, the counter trend movements can wipe you out. Okay, so in this bear market, those bear market rallies can wipe you out. So that's why usually equity bears get wiped out in bear markets. I've been saying this since December. So keep that in mind. There's a reason why I keep repeating these things over and over again. All right. So this is, so again, junk ADL line is going up. Our Moab signal, which is the mother of all buy the dips, happens when this makes a higher high and a higher low. We are still ways away from that. We almost did that back in August, September. We almost broke above the June, kind of the June local highs, but we didn't. We were short by like 20 something points, okay, out of tens of thousands. So we were almost there, like literally almost there, okay? Literally out of tens of thousands, you're only, out of 100,000, you're only like 20, 30 points off. That's pretty much like flat. It's like, almost like a double top or something. Except on double tops, you want it on an uptrend. But anyway, but you know what I'm saying, this could not make a higher high, and it failed. And that's we did some trades right here. Remember, we did some put trades right here, QQQ puts right there, and we made a good amount of money then. And we also got out of our IWM leaps right here. We rode those leaps up for a very good profit, and that gave us a very good signal. Usually this will turn before the market does, about 2 or 3 sessions. Okay, so it's a good lie detector. It also gives you these trend reversals. It also, warns you about these trend reversals. Back in November, December, I was warning you guys that in January we might see some volatility into the market. And the reason for that was the junk bonds ADL line was already making a downward trend starting in November. But the market made its highs in January, okay? So sometimes it can be a couple of months ahead, especially in trend reversals. It can be a couple months ahead or a few weeks ahead, all right? But as far as like the continuation of a trend, it can be just a couple sessions ahead. Okay, so as a trend continuation, the longer term trend continuation tool, it's a pretty good signal, and it only front runs it by a few sessions, so it's pretty useful in that regard. But again, the most useful thing about it is a lie detector. If it's going up, it means that these rallies could last a couple of weeks. All right, and we saw that in June, we saw that in July. In July, remember, we had 4 days in a row after July 4th weekend, and then it started this rally that lasted like about a month and a half or so. Okay, it's the same thing here. I think this rally is going to continue. We probably rally into year end, probably into January, February. Okay, I think we're going to rally into that, and then after that, who knows? I don't know. Okay, so based on the data, if the data continues to act like this, I think this continues until beginning of 2023. All right. Other liquidity indicators are New York high low line. Our New York high low line basically measures the highs minus the lows. What stocks in the New York Stock Exchange are making 52-week highs versus making 52-week lows. If more stocks are making 52-week highs, this line curves up. If more stocks are making 52-week lows, this line curves down. Okay. Right now, there's 3 moving averages that, when I look back in history, when I look back at this line, since the 70s, there are 3 moving averages that are very important: the 4, 9, and the 20. Whenever the New York high-low line, cumulative line, curves above those 3 lines, usually that ends a bear market. Okay, if we see this curve up above all moving averages, usually that's the start of the end of the bear market. Okay, we haven't seen that all year in all of 2022. Now, however, we are above the first moving average. Now, we've flattened out and we've gone above 2 moving averages twice this year, or 2 or 3 times this year, actually. Back in April, May, I think also in July, August in August as well. I think it only happened twice. So twice this year, we got over 2 of the moving averages, but not all 3. Okay, so all year we've been going down. All right, when this moves above 1 or 2 moving averages, usually again the rallies can last a little bit longer. Instead of like 2 or 3 day short covering rallies, this could be a couple of weeks long. So again, goes with our thesis that this could be something that lasts for a few weeks to a couple of months. All right. So all that data is supporting that. New York advanced decline line, advanced decline. This is the same thing as our junk bonds ADL, advanced decline line, except this is for stocks on the New York Stock Exchange. It is, look at that, it is going up. So more advances than declines. Also too, in our equal weighted S&P 500, our equal weighted S&P 500 now is above the 200-day moving average, the equal weighted S&P 500. Okay, it is attempting to make a higher high. All right, it is attempting to make that higher high. All right, so that means breadth is re-entering the market. Okay, so that is the wide market. Now let's talk about investment themes. Okay, so this is for share buying or for leap strategies. What are some of the themes that I'm looking at right now? Right now, for the most part, and you guys know this, I'm really focused on metals. All right, I'm focused on food commodities. All right, and I'm energy. And those are the really big 3 big components that I'm going to be focusing on. We've already been focusing on this. Again, guys, my biggest position right now in my speculative account is UUUU, energy fuels. If you're going to be in one metal, okay, if you're going to be in one metal, it should be uranium. Okay, uranium. I think we're going to have a nuclear renaissance. You guys know about what my views are on uranium. I've talked about uranium so much. We've talked about this back in June. While most people started talking about uranium back in August and September, but we here at Checkmate Trading, we started talking about that in June. Okay, so I'm very long on uranium, and UUUU is my biggest position in my spec account. I also though want to get into some precious and industrial metals as well too. So right now, we wanted to get into gold. We talked about gold back in June as well too, that we saw the precious metals market turning and we really wanted to get involved in the market. However, we missed our buy. I mean, I missed my buy level, literally my alert, by 8 cents. So that I feel a little salty about that, but I do think that if this retraces back down, we might see another opportunity to get into some gold miner names. I want to get into some leaps on the gold miners, so GDX or GDXJ, silver miners as well too, SIL, SILJ. SIL is the silver mining ETF. SILJ is the junior silver miners. I'm looking at some leap. I want to get into some leaps, okay? And when I mean by leaps, I'm talking about the 400 or the 800 day. Yeah, the 430 or the 794 day, the January 2024 or January 2025 leaps, all right? I want to get at least 3-to-1 leverage. So the leaps, I don't want to pay more than a third of what the share price is for that leap. So let's just use SLJ as an example. It's about $10 a share. I don't want to pay more than 333, okay? It's 1064, so what is that? I don't know. 350 or so? I don't want to pay more than 350 for those leaps. Okay, so for SLJ, I might have to get into the 430, but we'll see. GDXJ, so again, I'm going to do this when it falls back just a little bit. We might see the dollar, all right, we might see the dollar do a little bit of short covering here. Maybe nothing, especially currencies, they don't move in a straight line down. So it came down, it could retrace a little bit and then continue its way down too. So on that retrace, if the dollar retraces back up, just to back test its breakdown, we might see gold come back down a little bit. And that might be a good entry for us to get into some leaps on these names. One of the individual gold names I'm looking at is Barrick Gold. Its option chain is actually quite nice, and it's not that bad. The IV is not that bad in some of the longer dated contracts, so that looks pretty attractive to me. But again, I might just go with the ETF stuff, just because I don't want that individual company risk. There's usually with the metal miners, there's a lot of drama in metal miners. They get sued left and right, and environmental groups get involved, court cases, this, that, disagreements on mineral rights, all types of problems happen in mining names. So for gold, for the precious metals, I may opt to use an ETF to kind of even out all that noise. So I am looking into getting into some precious metals now. In non-gold, silver, I'm also looking at platinum. Now, gold and silver may have run up a lot, but platinum names have not. Okay, platinum names have not, and one platinum name that I'm really looking at. There are platinum ETFs, but platinum ETFs don't have options chain on that. I believe one of them is a PLAT. PLAT does not have an options chain, I believe. No, it doesn't. So I'm not really interested in buying a PLAT ETFs. I don't like buying shares of mining ETFs. I'd rather get into a leap or something. But since there's no leap on platinum ETF, there is one platinum play that I'm looking at is PLG. PLG is a Canadian company, but they have mines in South Africa. Okay, the reason why I like PLG is because one, they just got a dismissal on a lawsuit. Remember I told you, metal mining, they got a lot of drama, but there was another mining company that sued them in South African court, and the South African courts dismissed that claim. And so right now it's been basing, and, if you just look at it on a technical basis, it looks like it's been making a box here. One could call it a Darvis trend reversal box if you believe that this trend is going to reverse. All right. I do think this is getting ripe for a breakout, and I think platinum is going to have its moment, especially if the Russia's sanctions keep continuing. I do think that this might be a name. Now, this is very speculative. It's a $1.72 stock, so this is a pretty speculative stock. So I wouldn't be going all crazy into it, and I wouldn't be using leaps on this. The share price is so low, you might as well just buy the shares outright. But I do think that once they and also too, with their last earnings call, I believe the last earnings call was last quarter, so their earnings is coming up in a couple of days. They did have a bigger than expected loss because of the legal fees that they had to pay for that court case. And now that it's dismissed, it just got dismissed recently, their costs are probably going to come down. Also, too, they're opening up their mines again. They're getting ready to produce again. And so I do think that as in the next couple of quarters, we're probably going to see increased sales and increased revenue coming into this company. And so I want to get involved before all that happens. And so I may start legging into this. The only problem here is that the earnings is coming up next week. So I may wait for those earnings, and I may want to buy a little bit closer to the bottom of that range, maybe start buying it around the 150 area. So that's what I'm looking at right now. PLG Platinum, that's my platinum thesis. Platinum is used in a lot of car parts, in electric batteries. I believe PLG is part owner of an electric battery company like Lions Technology. They're one of the major partners in Lions Technology. So, it has that whole, electric car, EV kind of play to it as well, but more on the natural resource side. And so I think this is the play to go in the macro environment that we're going in. And I think this is going to be a good 2 to 5 year hold. So that's my time horizon for this. Is about 2 to 5 years. So it's about about medium term. For me, that's medium term. I don't consider anything long term unless it's 10 years plus. And even then, that's a basic long term. Real long term is owning it forever, like my SPY shares or something like that. But anyway, 2 to 5 years. That's to me is a medium term play. 2 to 5 years. I am going to start accumulating this once it gets to around 150 or so, or we'll see what happens after the next earnings, which is next week. So that's that. Also, another theme of mine, oil tankers. I want to get involved with oil tankers, and here's my thesis on oil tankers. So right now, we've seen the shipping rates come down for the past couple of weeks. Now, I do think shipping rates are bound to go back up again. If history doesn't always repeat itself, but it does rhyme. And so oftentimes in these commodity booms, we do see shipping rates go up. And so we've already seen some of the shipping rates go up, pre-2022. Back in the 2000s commodities boom, we saw the initial Balkan Dry Index. This is the index for a lot of the shipping routes throughout the world. It's quoted in the markets in Great Britain. This is the quotes from all the major shipping carriers. So usually we see that it's not a straight line up. We have a first episode, and then we back off, and then shipping rates come back again. Usually, though, when shipping rates come back, it's about this time of year, around September, October or so. We saw that here as well too. In the 2000s, we saw. Around this time in 2019, we also saw that as well too. Around closer to end of the year, we do see that if this is going to break out, we might see it towards the end of the year. But I do think that shipping rates will come back, especially since now a lot of the trade sanctions and Russia are set to continue with the expectation that they're going to continue. There's going to have to be more orders from different routes for fuel, for food, all types of things. So so the shipping rates, I think, will keep going up. I think right now it's just a temporary kind of pullback, but it will come back up. So I'm looking at some tankers. Although this morning I just found out that one of the tankers that I was looking at actually had earnings. So I'm going to have to go back and listen on that earnings call. I didn't have time to go through that because it just literally came out right before the market came out the market opened this morning. But some of the tankers that I'm looking at are FLNG. FLNG is a natural gas tanker company. This is the one that had earnings. This is the one that I really want to get involved in, and it's down about 6% today because of earnings. I don't know why it's down. So it it came in under its expectations. So we're seeing a little bit of a sell-off. Ooh, it was even down even more today. Wow, look at that. Well, let's give it a 3-day rule. I'm sure there's a lot of people who leveraged long into this, so we might not see them get liquidated until day 3. This would be day 1, which is Tuesday, Wednesday, Thursday. So maybe on Thursday, if it gets down to around this level right here, around 30 bucks, I may attempt to get long on this. FLNG has an options market. It does have the 430 and 794 day expiration. So that's January 2024, January 2025. I am looking to get 3-to-1 leverage. So again, if it's around 30 bucks, I don't want to be spending more than 10 bucks on a contract. Maybe around the 25, 22 and a half strike for January 2025. I may want to enter in on that later this week if this gets to closer to $30. Some other ones that I'm looking at too, FRO, Frontline, that's another one. That one actually, the last commodities boom, look at that. See, the last commodities boom, it went all the way up to $300 a share. So I'm not saying that that's going to happen here. I mean, it might, but I do think the shipping rates, again, are going to come back up. We're going to see commodities. I think the commodity market is going to come back end of Q1, beginning of Q2 of 2023. And again, because of the sanctions, people who import metals, fuel, food, they're going to have to get, shipments from other places with more sanctions, more global conflicts around the world. So that is going to, I think, drive up shipping rates. And I think the Baltic Dry Index is going to go up probably starting at the end of this year. It's probably going to start creeping up. And I think these stocks have a lot of room to still go. I really like FLNG, though, because FLNG has these new ships that are equipped for natural gas transport. And I think natural gas, I mean, that's the fossil fuel of today and tomorrow is natural gas. Okay, it's got I think it's going to become more and more important of a commodity. They also have these their new boats are also very energy efficient and have a very low carbon footprint. So that also is a plus. And it has a cost savings on their part. Also, probably too, it's probably beneficial to them on a litigation front and maybe with some environmental groups. So again, this oil tankers, they also tend to have a lot of drama. So again, position sizing, don't get too crazy on this, but I will venture into this maybe on Thursday. Let's see where it's at, and I might get into this. But tomorrow and Thursday for the market memo, I'll try to do my digging on the earnings report that just came out today, and I'll try to get a transcript of that earnings call, and I'll let you guys know about my insights in that. So we talked about now metals, we talked about uranium, we talked about oil tankers, and tomorrow we'll talk a little bit more in depth on uranium, okay, and the thesis around uranium. But also, I just wanted to touch up on on the food, our food thesis as well too. We're in Pilgrim's Pride, okay? Pilgrim's Pride is actually doing pretty good. This is our chicken play. Over the summer in the United States, a lot of cattle ranchers slaughtered their calves because the cost of water and the cost of feed went up too high. If you actually look at the live cattle futures, they're still on a upward trend. They still haven't lost their downtrend all year. And not only that, a record number of these calves got slaughtered. So what's going to happen to future supply of beef? Now, when beef starts getting expensive, people start looking for alternative proteins. The alternative proteins are chicken and pork. So I think chicken prices are going to go up. We already saw in a McDonald's and in some of the other food stocks, primarily McDonald's, that chicken is doing very well. Their chicken, their adult Happy Meals with chicken nuggets and the chicken sandwich is doing extremely well. In Europe, they got the chicken Big Mac. It's one of the big growth drivers over there, and they outperformed on their earnings. And so margins are going to be very good. PPC had earnings that came out just recently. Their margins were excellent. Their volumes didn't really go up that much, but their profits were up like, it was something like 15 to 20%. And a lot of that had to do with pricing power. Okay. And so that is the food theme. I do have one more stock that I want to add to that, and that's VITL, Vital Farms. Vital Farms deals with eggs. Okay, eggs. All right. It's a NASDAQ stock. It doesn't make consistent profits, and so that's why we saw it sell off this year. This year has not been a very good year for Vital, but however, their last earnings came out better than expected. Okay, better than expected earnings. I think Vital, this might be a good play. Again, 2 to 5 year holding period. It is, if you look at the weekly chart, it is basing right here. Okay, it kind of looks like it's forming a base. Okay, on a weekly chart, it made a low. Okay, it made a higher low, and it's now attempting to make a higher high on the weekly chart. So if this makes a higher high on the weekly chart and then comes back down and retests this line right here, which is around what? Around $14, I might get long on this. Okay? I might get long on that. Okay? So VITL. Now, this does not have an options market, I should back up there. It does have an options market. It doesn't have the January 2024, January 2025 chain. So I may actually end up going in shares on this. Okay, shares or maybe call spreads for April. I might do call spread. It just depends. It depends on what the IV looks like. It depends on what the spread is. There's not much options participation in this stock. And so if you look at the spreads are pretty bad. The bid asks are really, really bad. So getting in and out of a spread is going to be very expensive. So I might not use options on this. I might have to use shares. But this is on my radar right now, VITL. That's one of our food stocks that I'm going to also venture into. And again, for this, I really want to see that higher high being made this week, and I want to see that back test of that higher high around that 14, and that's where I'll go. And then if it closes another week below then, that's when I'll get out, or we'll see it run, one or the other. Okay, so that is my plan for VITL, and I'm going to be in that as well. All right. Is there anything you guys want to look at? That's all I had for today. Today was a little bit longer than expected, and I'll go more in depth into my theses tomorrow and Thursday. I will dive more deeply into uranium, and I got some other uranium plays that I think might be good as well. A little bit more speculative, a little bit more risky. I know some of you guys like that, and so I've got some more uranium plays that I'm going to be sharing with you guys tomorrow. I'll also dive more deep into the oil tanker and natural gas tankers tonight, and I'll let you guys know what the earnings came for FLNG, and I think some of the other tankers are having earnings this week as well too. So I'll try to let you guys know when those happen. Also too, on Thursday, most likely we'll dive more deep into the food thesis and the precious metals thesis. Okay, so that's kind of the theme for this week. Is I'm trying to look for plays that are going to do well for this end of year rally that I think we're going to have, all right, and still maintain value when we start seeing choppy markets again next year. I do think inflation comes back. I think the commodity story comes back after Q1, Q2 of 2023. I think inflation will come back. I think we'll see some type of emerging market solvency risk happening as well too. And so I want plays that will do well in that macro environment. Okay, so again, it's going to be metal mining, mostly uranium, precious metals, platinum. In the order that I like metals, it's uranium, platinum, silver, gold, and copper. Those copper's last. Yeah, actually, don't even add copper into it. The main thing I'm looking at is uranium, platinum, silver, and gold. Those are the four metals that I'm really looking for. And then again, outside of the metals, energy And I think energy tankers, that's where I want to get exposure. I already have exposure to the energy diversifieds. One of my forever holdings is in Chevron. So I'm just trying to add a little boost to that. So that's how I'm going to add the boost. I'm going to get into some oil and natural gas tankers, and then also food commodities, okay? Specifically the price of chicken, because the price of beef is going to go up. All right. So that's my thesis, my investment thesis, the themes that I'm focusing on for end of this year into next year. All right. Any questions, comments, rude remarks, anything else you guys want to look at? Going once, going twice. All right, then, in that case, we will wrap up our session of the Market Memo today. Our Discord invitation link is in the description below. Come join our Discord. Be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment. Show us some love, baby. All right, I'll be back on tomorrow, Wednesday at 10 a.m., 30 minutes after the New York Stock Exchange opens. I'll see you guys then. Trade safe, guys.